Hey, it's Nick here, and you're in the Transparent FX Academy. I'm a top author on TradingView, and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. The pair that I want to speak about in today's video is GBP USD, one of the most traded pairs in the market. And the reason for which I want to give you guys an update on the previous analysis that I had performed on GBP USD is because now the market has provided exactly the move that we wanted to see. So it's time to make an update on our previous analysis and see where we can be looking for the next opportunity on GBP USD. Now, as usual, I will be keeping this analysis as educational as possible. So first, we will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective with the commitment of traders, which is what hedge funds are currently doing on the pound, specifically GBP USD, because all currencies on the spot are traded against the USD. And if you're able to see how the biggest banks and institutions are shifting their positioning in time, you do have an advantage over your competition in the market because you can trade alongside the biggest banks and institutions, so the big players in the market. So without further ado, let's get straight into this analysis, and I will keep it as educational as possible. Now, starting here from the monthly time frame, what we have is a market which has provided this W formation. Now, after a W formation, what you want to see is the market create a move to the downside to go and complete the pattern at the previous resistance, now turn support, and then you expect the market to provide the continuation to the upside for the creation of a higher high and completion of this impulse correction and impulse pattern to the upside. And what we can see is that is exactly what the market did. In fact, what the market did is first, the market went and completed the W formation at the neckline, and now the market is providing the continuation to the upside and the creation of this higher high, completing this impulse correction and impulse pattern to the upside, which is exactly what we expected in the first place. So here on the monthly time frame, GBP USD is behaving exactly as we usually expect in this kind of situations. Now, there is one very important thing to mention. Now, I have made a video explaining how to use Fibonacci. Specifically, I said if you have an impulse in the market and you want to measure possible targets of this impulse once it creates a higher high, then what you have to do is take your Fibonacci on the retracement, so from this low to this high. And what we can see here is that the market is about to hit the -27 of the Fibonacci taken on the retracement, which is the first upside target and a quite strong resistance zone. So we will be keeping this horizontal ray just to remind ourselves that is a very strong resistance zone for this market. Perfect. Now we know what we have on the monthly. Let's go down on the weekly. Now, on the weekly time frame, what we can see is that the market has been creating a quite massive move to the upside. Specifically, we have 5 waves to the upside. The first wave, second, third, fourth, and fifth. Now, after 5 waves, what you expect is for the market to provide another retracement, possibly even a break below this support. But this is just extra confluence. One clear thing that we see here on the weekly is that everything is bullish. The market has been respecting the previous resistances, now turned support multiple times. And the last level of resistance was the high that the market had created here, which now that the market has broken it to the upside is turned support. So what we can expect is for the market to create a retracement to go at least to test this previous resistance, now turned support, from a weekly perspective. Let's go down on the daily and see what we have on the daily time frame. Now, on the daily, we had spoken about GBP USD quite a few times in the past. I spoke about the GBP USD after the market had created this W formation. I made a full breakdown explaining all the reasons for which, after this W, we wanted to see the market create a move to the downside and complete the pattern at this neckline, and then create the move to the upside. And that is exactly what the market did. Then I spoke about GBP USD again when the market was here, and I made a full breakdown explaining all the reasons for which from here we wanted to see first a retracement and then the continuation to the upside for the creation of a higher high, and again, that is exactly what the market did. Then after this overextended W formation, I made another breakdown explaining all the reasons for which from here first we wanted to see a retracement and then the continuation to the upside for the creation of a higher high, and again, that is exactly what the market did. Then when the market was here, I made a full breakdown explaining all the reasons for which we wanted to see the market provide a nice retracement, and again, that is exactly what the market did. Then we had the creation of this quite strong impulse to the upside here, retracement, and when the market was here, I made another breakdown explaining all the reasons for which we wanted to see the market create this move to the upside, and again, that is exactly what the market did. Then we had this massive W formation, and I made a full breakdown when we were here, explaining all the reasons for which we wanted to see this move to the downside. And again, that is exactly what the market did. And with the very last analysis, what did we say? In the very last analysis, when the market was at this support, what we said is that if the market would be respecting the support, creating a break above it from a daily closing perspective, we could expect continuation to the upside. And in fact, that is exactly what the market did. And by the way, I will link all this previous analysis in description. So you find all this previous analysis linked in description, so you can go and check it out for further reference and more free education. Hey, just a quick thing, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. But at the moment, what do we have and how we can be looking for the next opportunity on GBP USD? Now, as usual, monthly, weekly, and daily are the best time frames for the direction of the market. But before I show you what we have on the daily time frame from a directional aspect and then how we can be looking for an opportunity, let's first go and see what we have from an institutional perspective on the pound, specifically on GBP USD. Why GBP USD? Because all currencies on the spot are traded against the USD. So if you check the data for the pound, you are actually already checking GBP USD. And what we can see is that with the last reports, hedge funds, so the biggest speculators in the market, the non-commercials in the market, were increasing their net positions. In fact, we went from having minus 19.7k net positions all the way up to having plus 6k net positions, which means that we went from having more shorts than longs on the pound from an institutional perspective with 47.2k shorts and 27.4k longs, all the way up to having more longs than shorts, with 37.5k longs and 31.5k shorts. So what we have seen here is a big increase in the long positions and decrease in the short positions. So what you expect when the biggest speculators in the market, which have massive amount of money, are increasing their long positions and decreasing their shorts, you expect the market to create a move to the upside, which is exactly what the market is doing. And now what we have? Now we have 37.5k long positions. Now, usually when you have such amount of longs, what happens at some point is that hedge funds start adding against shorts and start taking their profits on the longs if the market actually created the move to the upside, which means that we could see a retracement happen quite soon. And we already know from a technical perspective that we are approaching strong resistance. So how we will be approaching this kind of opportunity with students? Now, first, what we have on the daily. Now, on the daily, we have a market which has created first this move to the downside, then this move to the upside, then another move to the downside, and then this move to the upside. Now, this pattern is called an overextended W formation. You have a move to the downside, move back up, move back down, and the market creates a higher high breaking above this high here. So basically creating an overextension in the market. Now, after an overextended W formation, what you expect, no matter how much this market creates a move to the upside, at some point you expect the market to provide a retracement at least to the 0.382 of the Fibonacci taken on the daily impulse. So you expect the market to create a retracement to the 0.32 of the Fibonacci taken on the daily impulse, which in this case, the daily impulse is exactly from this low here to the high that the market will create before starting the retracement. So how do we know when the market is ready to create the move to the downside? Now, as usual, trading is reactive, is not predictive, as I have already said. And the monthly, weekly, and daily timeframes combined with the COT data are the best time frames for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. So the way in which we will be approaching this with students is exactly from a reactive perspective and not predictive. Now, on the 4 hours, what we know is that everything is still bullish. The market has been creating higher highs, higher lows, has an extremely strong bullish momentum. And until everything will remain this bullish, the market will easily continue to the upside. And that is even better. Why it is better? Because the more the market will continue to the upside, the better the risk to reward and the amount of pips that we can be looking to capitalize on when the move to the downside will actually start will be greater. So the more the more the market will continue to the upside, the better the risk to reward and the amount of pips that we can be capitalizing on will be. So with students, what we will be doing is monitoring price action from a 4-hour perspective during this move to the upside. And we will be waiting for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. And as soon as the market will shift from a 4-hour bullish to a 4-hour bearish market, at that point, we will be adding GBP USD to our watch list with students. And as soon as the market will provide to us one of our valid entries with students, we will be taking a nice short with a very good risk to reward and very good probability at that point for the move to the downside and for the market to retrace at least to the 0.32 of the Fibonacci taken on the daily impulse. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.